From the Venture Accelerator at UCLA Anderson, Accelerate, an entrepreneurship podcast, hosted by entrepreneur in residence, Rod Kurtz.
How do you build a truly sustainable company? Is there really a formula to it? Welcome to the premiere episode of Accelerate, a new podcast from the Venture Accelerator at UCLA Anderson. I'm Rod Kurtz, and among my many hats, I serve as entrepreneur in residence at the Accelerator. Thanks to the magic of Zoom backgrounds, it almost feels like I'm on campus. We'll all be back for real sometime soon. The COVID-19 pandemic has forced us to reimagine almost everything about business, and the entrepreneurs who are weathering the storm are the ones who are connecting and conversing, almost crowdsourcing solutions during this unprecedented time. With so many fascinating conversations going on, we wanted to reach out to some of the smartest business minds in the Anderson orbit and share those conversations with you. After all, this kind of thoughtful dialogue and real-time learning are at the core of what Anderson and the Price Center for Entrepreneurship and Innovation have been doing for decades. So like all savvy entrepreneurs, we're adjusting to the world around us. Here we go. I'm thrilled to introduce our first guest, Rob Dyrdek, founder and CEO of the Dyrdek Machine, based right here in Los Angeles. Rob got his start as a professional skateboarder, founded his first company at the age of 19, and since then has become a serial entrepreneur and investor, successful TV personality, executive producer, and beyond. You might know him from his multiple shows on MTV over the past decade, including the wildly successful Ridiculousness, which he created and is now entering its 19th season. But off camera, his day job is running the Dyrdek Machine, a venture studio founded in 2016 that seeks out bright ideas and then designs, shapes, builds, and invests in them, acting as co-founders to create successful businesses. His wide-ranging portfolio includes Outstanding Foods, Momentous, and Super Jacket, which was recently acquired for nearly $100 million. Rob is one of the most forward-thinking entrepreneurs I know, and I'm proud to also call him a longtime partner, mentor, and friend. Rob, it's great to see you. I think the last time we saw each other in person was actually on campus. You were about to join the Accelerator as an advisor, and then all this happened, and here we are behind our screens, but it's great to see you nonetheless. I guess, my first question is the obvious one. How are you doing amid all this? What's life been like, business and otherwise?
I think for me, I've been fortunate enough to where quarantine has served me this ability to get incredibly focused and do a lot of deep work and a lot of long-term planning that normally I have to fit in between the chaos of the fires I have to put out and the demanding schedule that I have. So fortunately, I had sold a handful of companies last year, and all of the companies that I have are primarily consumer products that could thrive in a direct-to-consumer space, and even had a couple acquisitions that happened, during the quarantine. So for me, having this amazing schedule and spending all this time with my family and creating this sort of balanced flow and eliminating travel time and unnecessary meetings has been really helpful for me.
Yeah, I mean, we've been checking in since the beginning of this, and I've been so impressed at how you just sort of embraced it. A lot of entrepreneurs threw their hands in the air. They didn't know what to do. And I think you saw the silver linings in all this. And, I know you've spent a lot of good quality time with the family, and you've been juggling. We all wish we could go back to normal, but I think your routine and how you embrace this is one top lesson for other entrepreneurs out there, that we have to live with this for now. And, you're sort of taking advantage of the situation. I want to kind of jump to the beginning. Tell us about the Dyrdek Machine, why you started it, how you started it, and what's been the approach in the past 4 years since it was created.
Ultimately it was my passion for developing and creating businesses. I don't necessarily love operating businesses as much as I love the creation process and being an advisor and mentor to like-minded, amazing founders that have great synergy creatively and both from a business standpoint together and go out and create amazing companies together. I think it's just something I love to do so much. But why I created the Dyrdek Machine was ultimately I had so much success and failure in business, And it bothered me because it wasn't clear why some things really worked and some things didn't work. And, I had taken some really big shots and risked, a lot of capital that now I look back on. Of course, that didn't work. You know what I mean? And I think that sort of drove me to want to learn about business completely, turn that into a system that was that allowed me to create businesses that were successful at a more consistent rate. Because anyone in business will tell you the process and the creation and everything about it is absolutely thrilling. It is a wild, chaotic ride, beginning to end, all the way to acquisition, man. It's not over till somebody acquires it and it's no longer your responsibility. But it is an absolute nightmare when it's not growing or finding success, and I think I really built the system to be able to be optimized over time to make sure that my passion and want to create these impactful companies actually happens and successful companies come out of it, rather than putting a ton of energy into stuff that doesn't work, right? And for me, it's the art, science, and magic of creating business, right? Where the art is the creative side, and you've got to shape it and turn it in and get feedback. It's this living, breathing thing you've got to actually shape into a place that people actually really love it and are loyal to it and want to buy it. And then there's science. There's just systems and proven processes and that go with business that you just have to have in order to find success. And then the magic is you got to get a little bit lucky in there. It's just the reality of whether it's the right market timing, you pivot into the right product at the right time. There's so many X factors that happen when operating and building a business that you can't explain it by anything other than magic.
Well, and you mentioned X factors, and that's a reality for entrepreneurs and startups, even under normal circumstances. Obviously, we're dealing with a very big X factor right now with COVID-19. How have your portfolio companies been doing, and what's been your guidance to them? Essentially, you run your own accelerator in a sense. You're involved with the accelerator at UCLA, but you incubate these companies. You serve, as I mentioned, as a co-founder. What, as sort of their fearless leader, what's been your advice to them during this time?
Well, I'll tell you what, one of the things that I focused on when it came to building companies, it was a certain type of mentality, right? That do or die mentality, that grit and determination, that relentless work ethic, like that unwavering self-belief. And that's tested at the highest level in a situation like a pandemic, right? And it's proven to be an invaluable core to who you partner with, because just like me, I didn't think twice about the pandemic. I immediately adjusted and was like, where's the opportunity in here for me? What can I do to evolve my own thinking, my own self, my own system, everything I'm trying to do? And almost every single one of my portfolio companies followed suit, right? Like, even something like Pig Out Chips that pivoted into a pigless pork rind and exploded in direct to consumer, right? Like they said, hey, here's the opportunity. Everybody's sitting at home. Like, how can we get them to test it, try and go? Exploded, right? Like, did 20 times the revenue they ever expected to do direct to consumer. Someone like Chris King and his brand, the entire Italy gets shut down. He writes a book about his story and his passion for creating luxury goods. I think, even oddly enough, I have a travel software company that was able to be acquired in the middle of the pandemic, right? So, and then for us, we continued. We have 2 builds that we're in the middle of building and launching right now that we were able to get deep on and continue to evolve and spend a lot of that time building out the creative side. And then with a, brilliant entrepreneur in Taylor Shoup, who built his own 300,000 square foot manufacturing facility in China, midway through quarantine, he was like, let's create a comedic platform for socks and launch it direct to consumer with subscription. And we talked about that in the middle of the beginning of the pandemic and had it launched and in people's hands by June, So there's no doubt, like, the real ones didn't even think twice about the pandemic and thought about what is every single way to attack this, right? And fortunately, it didn't disrupt anything majorly in my portfolio. It didn't put anything, a lot of the businesses that got the most pressure didn't have as much of a burn, didn't have as many employees, so it was a little bit easier to manage. But it's certainly, all things considered, I actually got away pretty clean in the sense of not owning anything in the food space. And really, Street League probably got hit the hardest, where the entire year was canceled, but it got acquired last year. So I feel for it, but it's no longer my responsibility. So, it although very close to me, it was taken off my hands right before the pandemic shut it down.
Yep. Well, I think that's such an important point, and that's something I've been preaching to the startups at the accelerator, that a lot of the things that you would have and should have been doing for your business right now, you can still be doing, whether it's creating a new marketing plan, opening up new markets. The smartest entrepreneurs I know are the ones who swim upstream, that when everyone else is panicking, they see the opportunity in this. And it sounds like you've really embraced that, which is great. I want to jump to sort of the machine model and approach that if you go to your website, and I encourage everyone to check it out at dyrdekmachine.com, one of the first things you see is you're explaining what you're not, that you're not a traditional venture capitalist, that you're not a traditional investment firm, that, as I said at the top, you really come in as a co-founder and create and incubate these brands. Why was it important for you to make that distinction, and how does it translate into sort of the day-to-day work with your portfolio companies?
Well, I think the difference is it's a very personal experience for me, and it's my life's mastery, and my true life passion is creating businesses, right? So I'm not an investor, right? I have no interest in investing in an idea you already have. If we can't create the idea together, then I don't want to do it. Like, to me, I love the ideas where it's me and a really smart, driven entrepreneur, and we're just having a conversation that sparks the, like, oh wow, like, okay, let's validate that, right? And let's go and go through the process to really understand, is that actual opportunity, and can we capitalize on it together? Because I think, for me, the battle of a company is won or lost in that sort of incubation period, then to its launch in that first sort of year, right? Like, and you can do so much pivoting and so much evolving and shaping and moving around before you ever get to market, because you want to know exactly who you're targeting when you get to market, to find out if this product is even going to convert with them. And if it's not, then you got to get to pivoting real quick, or else you're just going to die in the valley of death, right? So to me, again, it's an agile process, meaning it has structures and milestones that you have to reach if you're ever going to find success. But the journey there is utter chaos and filled with structured creative chaos and sort of nonstop rethinking and thinking and shaping and twisting and testing before you go out and see if the world will take it, is the best way to find success. Because at the end of the day, you can say it however you want. You can have as many advantages. You can be the biggest company in the world. Everybody is hunting product market fit. Like, you gotta grow a company into a place where you now have a core consumer and a base of revenue that allows you to now sustain, grow, and begin to build your story and acquire new customers to build a business that's bigger and better, and or create more products to sell to a loyal audience to find success. But the process is tried and true. It's taught in schools, it's in books, but for the most people, it's too nuanced and too deep to understand how absolutely complex it really is and how hard it really is. And that's where we come in and specifically me as your CEO visionary Sherpa, right? Like, let me be like pushing you through the nuance and helping you and pushing you into the things that you need to be thinking about, because I now have the experience of 50 entrepreneurs, right? Because all I do is build from zero, and it's primarily all I've ever done. So it's like my depth of understanding of the things that need to be thought about in order to find success is an experience level that's much deeper, because I get into the weeds with every single idea, right? So and that's where I have the most fun. It's like when it gets to product market fit and has scale, the stage for us is we want to create the idea together and capitalize the development, because we believe in the idea, we'll create it with you, we'll fund it to prove it, right? And that's anywhere from $250 to $1 million, right? Sometimes as high as $1.5 million. Then let's raise the capital needed to find product market fit, right? And then stay as lean as you can and be testing and pivoting all the way to product market fit. When you're there, go raise an A round, and I would like to move on to the next kids I want to coach, right? If I'm like a college coach and I got these amazing college athletes, when they get to the A round, they're heading off to the NBA, and I'm always there to support them and do everything I can to continue to drive and help with any advantages we have. But at the end of the day, I want to be able to go back into shaping and building, because that's what I love to do so much.
I love it. And I think what you're alluding to is really, the name has significance, that it is a machine, that you have this methodical process. I've been to your office a million times, and anyone who visits, you walk in and right away you see a giant mural sort of laying out the machine method. I joke it almost looks like the periodic table of elements, where you've got all these core components. Briefly talk about sort of that assembly line, that when an idea attracts you and an entrepreneur comes on board with the machine, sort of what does that assembly line look like? What are some of the core buckets and principles that you put these companies through? And as such, what would be your advice to other entrepreneurs out there that are looking to apply a similar methodology?
Well, look, it starts with discovery phase, right? Like, okay, like here's an idea. Now for us, we put every idea through a filtering of principles, right? So it's do or die or leadership, white space idea, clear path to liquidity, multiple unfair advantages that lead to revenue, right? So do or die or entrepreneur, you have got to be able to see business holistically. You have to understand brand, product, media, marketing, sales, finance, operations, and understand how to manage people to operate all that. There are very few great CEOs that don't have general knowledge and all the 7 core capabilities of business. Then grit, determination, like do you have the X factor of being a do or dier to actually bring that to weather the storm as things get real when it comes to building a business, because it's total chaos. White space, it can be a million different ways. You can be completely disrupted. It can be something as simple as marketing. I think a couple examples is very blown out sock market by creating it as a comedic platform that allows art to be put into the socks, and then creating a surprise and delight subscription service behind it, where you actually send it to your friends, where it's more like a greeting card, is a nuanced way of finding a white space versus something like Made by Science, our cannabis company that got acquired by Acreage for $160 million. It was green algae encapsulation technology IP, right? So it's like the full complete side where you just have full like innovative IP versus like a nuanced brand marketing side. So trying, and a lot of times we'll go through the process and shape it into white space. Someone will come in with a really good idea and a general thing, and we'll help move it in the discovery phase up to white space. We want a clear path to liquidity. At the end of the day, we want to be able to draw a line to who's going to acquire this and how much we're going to make before we ever start. Or we want to understand the unit economics and the customer acquisition costs and the core margin of the product to understand ultimately, could we create something that's not quite desirable to be acquired, but can be highly profitable, that we can split dividends with. Right now, the holy grail, of course, is when you do both. right? Which with Super Jacket, we were an insanely profitable company that then got acquired, right? So it's you make money the whole way and then you sell it and make a bunch of money. It's the most remarkable, thrilling experience you can do as it relates to what I do is it's venture creation. Still doing it for a return on capital, but love to create, right? It's the hybrid side. And then multiple unfair advantages that lead to revenue. Forget about, people always use like unfair advantages, right? But to us, it's like, how are we going to create revenue quickly? Because at the end of the day, the most pressure that your startup will ever be on is being able to generate revenue, to be able to hire people, be sustainable, show growth, raise more capital. And the more you can have a series of much easier paths to that, that's relationships with distributors, retailers, like, celebrity endorsement, a unique product relationship with an industry. There's so many different ways that you can apply that, but we look at that first before we then decide at the discovery phase, hey, we like this. Now let's go validate this through an immersion, right? Let's go deep into the market. Let's not try to do our traditional, the market size is this and the addressable market size is this, so our opportunity size is this, right? We try to avoid that because that's just, it's all of that is smart and it matters, but you want to really understand much deeper, like, this is who this is for. This is what they usually pay. This is what they usually buy. This is why they would buy this. And if they bought this much of it, here's their purchase behavior. This is how big it could be in 1 year, 2 year, 5 years. You should be able to eyeball that, right? So if you can't even get to the unit economics side of the business and understand it at the discovery phase and see it all the way to like, we could sell this for $150 million to Pfizer, to Kraft, whatever it may be, right? Like, it's like, you got to be able to see it even at that phase, right? Because then you get excited and now you have a thesis, right? Right there you have, or a hypothesis, right? Where from that discovery phase, we now have, okay, if we create X and cost this and target at this person, this is what this is why it's white space. This is why this do or dyer is the one. All that, we have a hypothesis at that point. Then we say, okay, we want to go to the validation phase. So in the validation phase, we go deep into the financials and deep into the individual. Now we're calling reference calls on and understanding everything about that person. We're testing them and their sort of brand and product knowledge and owned and media knowledge, and ultimately their marketing, sales knowledge, operational knowledge, financial knowledge, right? We're really beginning to understand their capabilities now at a deeper level. And then we spend all that time focusing in the validation phase of the true cost of what it would be to build this company, both from capital needs and distribution strategy, these sort of core things that matter the most on, is this a real idea? And then validate, like, could it be profitable or would somebody buy it? Then go out and talk to experts, do some initial market testing about the idea to get their feedback. Then we land on this opportunity package that says, okay, here we are. Here's the hypothesis. If we invest this much money, we're going to develop this for this audience, and then we're going to be able to take it to market and we'll raise this much money. And then this is how we're going to launch it. You know everything right there, because that's where I pulled the trigger. That's when I deploy my own capital to seed that business and develop it. And now this is the moment in time that I turn you into an action figure. Right. So when we pull that trigger, and now we're partners for life, right? It's more than business, it's life. Like, this isn't like, we call it, build together, bound forever, because I just co-signed you as basically we're married forever. You'll be attached to me and my history for the rest of my life. And so, like, I immortalize you in an action figure, and we are now like, and to me, another one of the things, we just stare it right in the face and say, will we be proud of this if it fails? Right. And it's like, yep, we love this person. This is an amazing idea. If it doesn't work, we still believed in it. That's why we did it. And then we get into the nitty gritty. Then we go and actually build the company, raise the capital, and go to market and hunt that product market fit.
Well, and I'm not sure our audience knows you're being literal, that you're successful founders, you actually create action figures to celebrate the exit.
No, we create the action figure to celebrate being partners.
Oh, okay.
Then when we sell a company, we have a liquidity vintage. I make a special wine, 24 bottles. I sign all 24, give 12 to the founder. I keep 12. And then we made championship gold trophies that we keep one for ourselves and then give one to the founder, to really create sort of this history and meaning of what it means to be a part of our universe, to attract better, stronger, faster, smarter entrepreneurs that want to be a part of our world and way of thinking.
Well, that actually gets to my next question, that a lot of what you've been talking about and what you look for is the idea and the concept and the white space as you talk about, but people are a huge component of this. I'm wondering, you get a million pitches because people know that you're in this space at this point. What do you look for in an entrepreneur as a person? What are some of the qualities that you seek to identify?
Look, I mean, those do or die qualities are, people, I call it passionately compelled, right? Where you're really driven out of like loving to like create something and know that you can make something that impacts the world, right? And makes a dent in the universe. I think you're not necessarily driven by money, but you're still understand money, and money is part of the game. It's relentlessly consistent. People that are they're so consistent that you just can rely on them, and they build trust in themselves and in teams and you and everybody, how they operate, perpetually optimizing. You're always getting better. You're always looking in on like, how can this be better? What can we do to this? Like, there's this just insane level of depth that you've got to look at into a business and constantly be evolving it, right? In order to find success. Magnetically inspiring. Like, how are you like radiating? Like, you love this so much that ultimately the people around you are connecting and wanting to be with it as a whole. And really, the truth is, does everybody always have every single aspect of it? It's not really, but I think the two core things that happen each and every time is relentless work ethic and unwavering self-belief, right? I just think that that's just the absolute core of those that actually pull this off, are willing to literally put in the work and understand that the only way they're ever going to quit is when they lose belief. And when people that have that unwavering belief in themselves, they just keep hunting. They will not, like, they would rather like die than let this thing fail. And it's a testimony to where, of how many companies that we have done in such a short amount of time, we have yet to take a loss on our books, right? And it's a testament to some that are, zombie companies right now, but have IP that are going to be acquired one day, right? Some that, there's no reason for them to stay in business, and they fought. I describe it as they're a plane that hit the trees like 2 or 3 times, but somehow pulled it up. That I've seen go and get acquired, right? So that sort of core spirit and relentlessness is just essential if you really want to create a company and find success, because it is so difficult, and you can't teach it. You gotta live it in the fire,
Yeah. Well, that kind of gets into my next question, which is a little more philosophical. It's something that you and I have discussed. It's something I've discussed at the Accelerator. Do you think entrepreneurs are born or made?
I as a natural born entrepreneur, I think they're made, right? Like, I think, I was always someone that was raised by entrepreneur wolves and grew up, started my first company super young and did all these different companies. But at the end of the day, you've got to actually be turned into an entrepreneur. Just because you start a company and take a risk does not mean you will ever find success as a startup founder, right? Like, you have got to have the desire to learn all aspects of business, because you've got to be able to see business from a holistic, three-dimensional way. You cannot look at what you love. Oh, I love product, and this is the sickest product ever, and it's got a 30% margin, and it's for me and my friends, yet no one in your age group or demo could care less about this product, right? It's the inability to see business like completely holistically and three-dimensionally, I think, is what stops so many entrepreneurs in their tracks. And you have to learn that. I don't think that is something that's natural. Your passion and desire for it can be born in you, but you do not. You're not a born entrepreneur. You're a made entrepreneur for sure.
Love that. Yeah, I agree.
That's why I wish I would have got the education at the school. You know, I would have saved me millions of dollars in all these years of pain.
I love it. You had the school of hard knocks, but no, I think that's why you've enjoyed your time at the accelerator so far, and we look forward to doing even more with you. I kind of want to get into that learning aspect. That, you know, I've known you for over 10 years now, and I've seen the way you've evolved and grown as an entrepreneur, and what you're doing now is incredible. But from an early age, when you were still rooted in skateboarding, starting your companies there, you've told me in the past that you were really a student of entrepreneurship, in a sense, trying to learn from everyone around you. And skateboarding is a very entrepreneurial industry because it's always been somewhat counterculture. I'm wondering, you know, how important is that learning component, and how do you approach it? I know you're someone who continues to learn every day, and more specifically, how would you advise students at Anderson and startups at the Price Center and the Accelerator to make the most of the resources they have at their disposal, including education, including mentors like you, you know, and learning from each other? What have you found to be successful as you've learned and grown as an entrepreneur?
You know, I think you have to understand that the process is nonstop learning, but learning in the sense of evolving. But you've also have to have clear end goals in mind. So you're evolving towards something, right? You can't just evolve to evolve and learn to learn. You got to start at the end, decide what you want to achieve, and then you have to outline all the milestones you need to get there, and then begin to learn everything you need to learn to achieve those milestones, right? I think that there's a gap between, you know, what you should learn versus what you need to learn, and what you're just like listening to inspire yourself, right? I think there's a clear delineation between each three. And then the idea that you're going to learn so much that you could never imagine when you actually do it. But it's the foundational stuff, right? It's the, like, you know, I have a vision for a 500-year family estate plan for the Dyrdek families. And I'm going to reward my children's children's children with money to build companies if they go and get a marketing degree, get a sales trade, learn media development, go get a brand and design degree, and get a product engineering degree, take operations classes, and take financial classes, right? I want, like, my kids to design and learn business holistically. I can't begin to stress the importance of, if you want to be an entrepreneur, you must have general knowledge in every aspect of the business. Otherwise, you're blindly hiring. Because at the end of the day, you can say, like, oh, I'm going to hire this guy because I don't like dealing with finance or operations. And he can just razzle dazzle you with, like, his 4 other jobs. And you're like, oh, this is perfect for what I need. And you have no idea to even assess ultimately what he's capable of, because you want to evolve and grow to a place where you are hiring people to execute specific things that you know need to be executed. You can build KPIs against it, follow them, help them, guide them, and make sure that you put the right people in place to fulfill the vision that you created initially. And you don't do that first try. You've got to ultimately begin to learn that and how to do that and get better at doing that over time. But you must master creating plans, right? Decide what you want, decide the steps to get there, then build a holistic strategy to achieve it is just an absolute must. Because when you master that, you can apply that to your own life, and you can begin to master life. You master time, you master energy, and ultimately that's going to bring you the most fulfillment and happiness along your journey.
Love it. Love it. So speaking of the next generation and the generation after that, when you got your start as an entrepreneur, you were around the age of some of our Anderson entrepreneurs. I'm wondering, what advice would you have given your 20-something self that you've learned in the years since?
Well, look, I for sure would have, I would say go read more, learn more, think about it more, right? I think my ambition and desire to just bring stuff to market overwhelmed how smart I was about it, right? I just really felt like, I came from the school of like where you just work like you can create a business idea and you just got to keep working it as hard as you can. And then there's no overnight successes in the game, right? Like it's that sort of mentality. And I just thought I was so destined to find success that the harder I work, the more likely I would be to be successful. And it's just not the case. You've got to really, if more than anything, if I could just tell myself back then, is just learn how to build believable plans that you can go out and put that same energy into, right? Because you have to realize that clarity is the foundation of belief, right? So when you have clear tactical plans that now you see how you're going to do the entire thing, or at least the first milestone you have to achieve, like you're like, okay, you get energy because you're like, okay, I know I can do it. You understand the steps to get there. Now put all that effort in. Now you just start making progress towards it. Now you begin to believe. Now the energy swells. Like it's actually the formula to achieve it the same way that you should know you understand the path and you're putting all this energy into it and you're not making any progression towards it. That's when you've got to just start pivoting and start making other decisions. And you don't have that. If you're going 100 million miles an hour and you don't know where you're going and you're just spinning the ground, you don't even know how to pivot. You just keep guessing because your milestones will never change. It's your plans and your strategy to get there are going to be the things that you have to learn to evolve over time.
Awesome. So, when I think of titles to describe you, there are many potentials out there. I think the two that come to mind are creator and brand builder. And you've talked a little bit about the creation side and looking for industry opportunities and the types of entrepreneurs you're attracted to. But one of your real strengths, in part because you're so media savvy, is building brands, not just companies, but the brands themselves and how consumers interact with them and what impression they get. So many of the startups at the Accelerator and at Anderson as a whole are in that very early stage of building their brands. I work with them on even things like coming up with a name and what do the social platforms look like? What does the website look like? Logo, look and feel, really ultimately figuring out what the story is behind their company. I'm wondering what lessons do you have for other entrepreneurs out there, especially at Anderson, that are in this foundational stage of figuring out what their brand is all about?
I think you've got to take it as serious as your product development and your financial opportunity, right? Like it is so crucial. And there's so many layers to doing it correctly. That's why in my 100-year plan of affecting my children's children is why I want you to understand business and financial and operational stuff so thoroughly, but I want you to learn brand, right? I want you to learn design and sort of what it is, because it ends up being the soul of your product and your idea, and ultimately, how that gets communicated to the world. And to me, it's the very best when what your product's name is connects to its value prop, that has the same energy as how you're going to market it and do your social, and the voice of your business that then seamlessly connects to the demo you're looking to connect with, right? And I think that sort of synergy, if you will, between those sort of moving parts is often overlooked. I think a lot of times, like, even really creative people will drive a brand that they think is cool, or some inside thing to them, right, that alienates the target audience that they're focused on, or the way that they're translating the value proposition of their product is not in a way that's going to be interesting to their audience enough to share with their friend, right? Because at the end of the day, you want to be able to have a product that's unique enough, branded in a way that your consumer becomes your loudest advocate and your greatest advertiser, right? Where they want to share it with their friend. And it's again, that art, science, and magic side of creating business, right? It's so essential to adding a deeper level of authenticity and believability, and in brand speak, the reason to believe, right? Your mission, vision, position, your how, what, why. All of these things really matter when you're building your brand strategy at its foundation, because it also allows you to look out and where can you scale this brand, right? So if you pin your brand, you have a platform concept, but you pin your brand into a name that keeps you locked in a singular product category, you made a huge mistake, right? And you try to create your brand that lives in this entirely no vertical, because you understand the business, and now the brand doesn't even fit in there, right? So there's so much of that foundational work. And again, what I love to do, there's nothing I love more than like the name and the tagline and the value prop, and like seeing it just, oh, and this is how it'll sound in social, and like, oh, you can do like a campaign like this, like when it unlocks and you can see it at scale, right? Then let's go validate it to like, okay, no, yeah, you could make coffee creamers, you could make chips, you could make supplements, you could do anything with this. It's a platform, right? I think even as that depth of knowledge is in ease of development, like the brands that have worked the best are when you like hit the idea and you almost talk it out of what it becomes 2 or 3 years later, right? So, and easier said than done, but it is something that I don't think is emphasized enough when it comes to teaching people how to manage and build a business, because it is essential in ultimately building that long-term loyalty with your consumer base.
Couldn't agree more. And it's so exciting to see it when it does take shape, and knowing what it looked like in the early stages and seeing it sort of out in the real world. I want to take a slightly wider view with the next question. You've been living and working in LA for, I think, 25 years at this point. I'm wondering if you can talk about, as someone who plays a real direct role in it now, talk about the growth of the LA startup and venture scene, how it's changed, where you think it's going, and again, what role do you feel you and the machine play in it?
I think it's been fascinating to see LA's sort of hybrid evolution, right? If Silicon Valley is this sort of tech and where this sort of innovative concepts come from, and then Silicon Beach became more like, yeah, there's some of that, but it's this weird mix of celebrity and consumer products, and like it was this much different sort of ecosystem. And down here, a lot of the players do big retail deals and create these much more dynamic sort of ways of creating businesses. And I think seeing it happen in so many different ways. I think it's more traditional entrepreneurialism as I know it growing up in Ohio. Everyone outside of Silicon Valley type of entrepreneurialism, and for me, I'm just a hardworking kid from the Midwest that loves to build companies, right? Like I still like am cut from that cloth. So I only want to build like products that I love and can't wait to give to the world, right? Each one that I want to build and last forever. I think that's probably a much different point of view than most of what I'd consider Los Angeles proper in this space. I think they're still very much venture focused, right? Because now you got to look at venture as a return on capital based off of stage game, right? A lot of funds out there looking at everything. If you're coming in at A rounds, you're looking for 5x on your money. You're in the angel round, you're looking for 10x on your money. You're in these B and C rounds, you're looking for 2, 3x on your money, right? Like that sort of approach to venture capital and private equity and return on capital is not where I play, right? I play as co-founder of like, let's create this. I'm like your rich uncle, right? Who has all this experience, you know what I mean? Who's going to like be your partner in this idea and help guide you and mentor you. But we're going to go like grind this out together. Is sort of the difference in where I play, right? It's just so much different than almost everybody here. No, most of the entire space is very much traditional, and I think even the younger space and a lot of the brands in the accelerator, I think a lot are less appealing to venture, and venture's looking for a clear path to return, as they would fit better for friends and family and rich uncles type of investments, right? Because you're ultimately maybe you get a payoff down the line, right? And I think anybody that's starting a company has to just be really thoughtful on it's not about continue the hero in creating companies is not getting to the next round, right? And I think that's kind of something that really hit Los Angeles and entrepreneurialism here as pretty hard, where like products that are usually felt for like, hey, get some seed money and try to acquire some customers and get some proof and go get a bank loan is how it would have been 10 years ago, right? Like we're in our seed round in a convertible note with a $5 million cap, and our next, it's like it's a sophisticated way of wealthy money, which gives its money to people to manage that money, to then invest that money, who needs to create a return on that money in order to ever get more money. You're really negotiating with a financial go-between that is a very sophisticated sort of process that most people look at like it from this one-dimensional way of like, oh, they gave me money because they believe in my idea, right? So I think it's amazing because I think we're a hybrid and we get to look at things much differently. Most of the stuff that we want to look at idea stage, nobody in this town wants to look at just a product idea, right? Like, so I think we have a lot bigger advantage at that. And then we want to put all the time, energy, and effort to create it together and fund it. And then decide, do we go out and find the right venture capital partners because we think we can build this to some sort of liquidity event is much different. But I would say it's probably the best city in the world if you're going to want to be an entrepreneur, especially how much money there's flooded in here and how much these funds have capital out here.
Well, that's what we like to hear. And I know a lot of the accelerator startups who are watching and listening are taking diligent notes and probably wondering how to get on your radar. But, as someone who, since I've known you, you've always been very forward thinking. You always have a plan and an end goal for both your individual ventures and, as you talked about, your whole grand scheme for the 500-year plan. So with that in mind, I'm wondering, with everything that's going on with COVID and beyond, what do you see the next year looking like for business in general and for you personally and for the machine?
Well, look, I think for me, at the tip of the spear for me is happiness and balance, right? So, at the end of the day, I have a super sophisticated system on how I operate my life and how I manage my own personal wealth and aspirations. That's something that gives me sort of great peace and purpose, right? Now, when I look at what my business goals and what I intend to achieve over the next 15 years and my 15-year plan, crystal clear, COVID's irrelevant, right? Now, that plan taking shape will be dictated by COVID's fallout, right? So now I'm cautiously looking at what the repercussions of unemployment and the wealth gap and sort of the social unrest and the political unrest, right? It's so much deeper, I think, than simply just putting it on COVID. COVID is just this weird, like bizarre thing in the middle of it. And I think the next 2 years are dangerous. I think the next year is dangerous, right? I think the next year is where the rubber meets the road, and ultimately we will understand what's the long-term effect of what happened in 2020. And look, I've heard someone that I respect deeply and admire as one of the planet's forward-thinking geniuses, and Ray Dalio, say we're headed into a depression, and the markets and the economy is going to be flat for 10 years. We're going to lose 10 years, right? And it's really hard to not hear someone that called the 2008 crash and is the most successful hedge fund manager and the most systematic, I believe I'm one of the most systematic minds that there is when it comes to living a holistic life. I am disciplined and live an absolutely insane life. And Ray Dalio is like 30 of me, right? Like I can't even, I'm like, he's crazy, right? And so
I can't imagine 30 of you.
Yeah, like that's Ray Dalio. So, to me, I'm not rushing into the next 2 years because I think we're in this sort of bizarre, false world where like the stimulus oh, hey, it's not as bad, and like, oh, things are still moving, there's still plenty of cash out there. Everybody was flush with cash because in my mind, we were in at the end of a 10-year cycle in year 12, right? And it was a bubble in every asset class, right? Every single asset class was overpriced. So super unusual. And it was already sketchy why I have so much cash in the first place, of like just not trusting sort of what even the future holds as it relates to what even it means to invest capital, right? So a much more sophisticated, personal, deeper way of looking at it. But the simple way is I'm gonna sit back and see what happens.
Yeah.
You know what I mean?
The short answer is it's complicated. Yeah. It's anyone's guess, because, as I've been preaching at the Accelerator and beyond, I mean, literally no one has ever lived through this unless you're 110 years old, when you lived through the last pandemic, which most people aren't 110. So we're all kind of navigating. I will say I've been encouraged by the resilience of really all the entrepreneurs I see out there, but also especially at the Accelerator, where they know that this is their time and they have to adapt accordingly. Sort of in that vein, I'm wondering, people don't know, but we actually we're planning to do an in-person fireside chat event with you at the Accelerator and at Anderson, and then literally this hit as we were planning it, and that's really why this podcast series came alive, as we wanted to keep having these conversations, and it's great that we're able to share your expertise with the audience. But what do you feel we're missing in business without real face-to-face contact during this time? Has it affected you? Have you felt the Zoom fatigue? And, just more generally, what are the benefits once we finally get past this to meeting again in person? Because there's talk of, we're all going to just work remotely, forever because of this. I'm missing it. I wish we were having this conversation in person. So how important is face-to-face when it comes to business and starting companies?
Look, when it started and call it that first month of like transitioning over to everything being Zoom, I would have said like, hey, this is cool, it's working, but there's no long-term validity in this. And I would say by now, month 4, I'm like, nope, this is the future. Like I'm already it's like I'm already doing job interviews and hiring people over Zoom. I'm building companies over Zoom. I'm like, I've already moved into doing it at such scale so quickly when I hated Zoom. I hated people even wanting to do a Zoom meeting for me. It was like awkward. It's like, I don't want to be in fake person.
Yep.
And I think what's actually going to happen is we're going to look back and think how funny Zoom is, because we're going to have these super sophisticated ways of interacting remotely that are much more dynamic and much stronger, that feel almost as if you're in person. And it'll be laughable to us that we were on these little screens looking at each other, right, with this terrible audio, So I do think that the future is going to be hybrid. I know for me, I will no longer like, it will not matter to me if somebody wants to call in, be part of like virtually in the same meeting, the same group. Like it won't bother me because now I'm so used to it. The same way that it gives me much more flexibility to just move my schedule around where I'm going to be and just say, hey, let's instead of meeting in person, let's do a Zoom to do it, right? Where before that'd be almost insulting. If I was to say, hey, Rod, I'd love to do this podcast with you, but I'm gonna have to do it over Zoom. You'd be like, this is crazy. You can't find time to drive over here, right? And I think that forced us into this incredibly beautiful flexibility that's going to make people happier, people more efficient, and ultimately not necessarily change working in person or working together, but just making it much more fluid. That I think is going to be a huge benefit to a lot of people.
Yeah, well, I miss our coffee walks at your office on a nice day. So I hope we're doing that again soon. And I do think it will be a hybrid of sorts. I've been sort of documenting some of the trends and pivots that we were forced to do because of COVID, and I think will stick with us and make us, more efficient and better entrepreneurs overall. So I encourage people to kind of see the silver lining of some of this, figure out what's working. I'm seeing so many companies make pivots that they were forced to make that they realize, wow, that's actually like a new line of business for us that we wouldn't have thought to do before, and we're going to keep doing that going forward. So the idea is to try to stay positive through this and find the advantages where you can find them. I'm wondering, it really was crazy timing that you were just getting involved with the accelerator when all this hit, and we so appreciate you staying involved over these past few months. But I'm wondering, just sort of your thoughts on the accelerator in general and your impressions of the first showcase that you attended at Google out here. I was sort of joking with you that you were so engaged in conversations. Your lovely wife was calling you to come home for dinner, and you were tearing yourself away because you were so engaged with it. Just your thoughts so far as someone who is early in your involvement.
I mean, look, I absolutely love the showcase. I think it fueled my desire to get involved. It fueled my desire to like, hey, can I get an MBA? Can I, I want my kids to go here. Like it was hugely impactful to me because it's super real. It's what I love. I just love hearing people's like take on an opportunity and then listening to their minds and how they think that it fits together. And I where they see the opportunity, how they see the opportunity growing. Like their vision for the capital needs. I mean, there's like no aspect of business creation on any level that I don't get excited about, right? And now there's just a certain raw version is when it's your very first sort of venture and you're, or a less experienced individual of like really trying to use the resource and the group and the knowledge to be a part of creating access and developing it that I just really, really enjoy, so it's like I never get tired of it. And it's a super authentic program that I think long term is going to make a big impact and help a ton of people and really attract a lot of people to want to be part of UCLA, because I think there's a huge opportunity for it to push to the forefront of modern entrepreneurialism with this program.
Well, we love to hear that, and we love having you be a part of it, and we look forward to growing the relationship even more over time. I'm wondering, a lot of people listening to this are from the Accelerator and from Anderson, and for those that are just starting out, they're real early stage companies. They're often pre-launch and pre-revenue, especially in this environment. As someone who's been there and has learned in that school of hard knocks, what's your advice to, in particular, very early stage entrepreneurs who don't even quite know how to navigate this because they're not really out there in the real world yet, but they want to keep pushing? How do you encourage them to stay positive and sort of keep on their game plan?
I think the interest level for your product and your concept, this is now the moment of truth on how valid and interesting your concept is, right? Because there is no doubt across the board on almost everything I'm seeing, including friends of mine, companies. I'm watching, I had a friend close a $20 million deal. We sold a company. We watched Outstanding Foods like knock out a $5 million growth round in the heart of the pandemic, right? It's just the reality of there's a real gut check on the true validity of what you're trying to ultimately develop if the interest is shut off in the way of just the pandemic, right? Because I think it's just telling, and this is the time, if you're getting people that are saying like, hey, I like this, but I would love to see this and that, it's like really use feedback. Everyone you pitch to, don't pitch with expectation for anything other than learning how you can make your next pitch better or make something nuanced a little bit better. Like listen to everybody's feedback, get everybody's feedback and apply that to what you're creating and how to evolve it. Never think that where your idea is at today is like, okay, either I raised the money or it's not it. You can be taking this time to be pivoting and shifting and moving and doing a ton of stuff in this phase to make your idea better and more appealing to when the market opens up even more significantly, that they're going to have a much wider range of appetite for your idea and what you're trying to do, especially if you haven't got it off the ground. If you raised a little bit of capital, I would just be super thoughtful on how to stretch that capital until you have a clear path to revenue, and not just pay yourself and burn that capital all the way down and then end up on the other side with no real story to tell, and not much change and still asking for more money, which ultimately is you're just going to dilute yourself. I think you got to be one of the biggest things with people that I think come out of accelerator type programs and really trying to march through in this much more sort of clear, sophisticated way is they take on a lot of capital early to figure it out, which ultimately when they do figure it out, they're left with a very small portion of equity, right? Which then, yes, it's your passion, your identity, and what you just wanted to see alive. But at the end of the day, you gave up so much of it that you probably wouldn't have needed to if you would have spent the time pivoting and adjusting and doing a lot of this early on, where you're only using capital to grow a business and not using capital to see if you have a business, right? I think that's one of the biggest problems in this day and age with startups.
I think that's a great point. And I come across a lot of companies that it seems like their sole focus is raising money as opposed to fleshing out the product and the concept and the marketing and all that. And the problem with money is it comes with strings. And, if you have a lot of it, you're tempted to spend it. And as you mentioned, not ultimately building the business you want in the end. So I think that's a great takeaway. I want to close with a couple questions on more of a personal level. Since I've known you and really throughout your career, you've always been focused on sort of mind, body, and soul, and taking care of yourself, and how your physical endurance influences how successful your business are, and how good you feel as an entrepreneur. So I'm wondering, just during this especially challenging and stressful and crazy time, any tips on self-care that you found have been helpful, and anything you'd want to share with other entrepreneurs out there?
Look, for me, it's so essential, and it's not like you don't do it overnight, right? You grow into becoming super efficient and really healthy and really focused and really consistent when it relates to mind, body, and soul, right? But you got to do a ton of self-evaluating along the way to really understand what gives you energy, what takes energy from you, what makes you happy. What do you love doing? What do you not love doing? There's all these things that you have to begin to manage in order to put yourself in a position to where you can be disciplined and take care of yourself at a higher level, right? I'm practice it. It's like life art to me. And I track all my numbers and all my data, and I get up, every day at 4:30. And what I do in the pandemic, I'm like, look at all that I can get done in this clean structure. What do I now get up at 4:30 in the morning and run this deep discipline beginning to end every single day, and structure my entire day around meetings and waking my kids up and putting my kids to bed and spending time with my wife and being really balanced. And then it was easy for me to almost never even like eat a snack or eat anything sugary. I haven't had a drink in a few months, right? Because I got into this extraordinary rhythm, and now I'm executing, basically 2-3 years of work in like 30 days because I have this structure, because, I'm not asked to do anything. It's remarkable, so, and it's taking someone who already believes in the discipline mindset and the structure. And I think you got to design your own balance and then run. Everybody operates at a certain level and where they're constantly energized. And for me, I just have to run at that level, and then I have to build balance around that level of operating. Like if I take 2 days off, it would basically crash the system. It's like a Ferrari that needs to be going that fast. You just have to design and have your balance inside all of that. And I think every person's different. And that's how you avoid burnout, right? I think for me, I need to just constantly be progressing and evolving against big ideas and plans and strategies. That's how I avoid burnout, right? It's if I stop for a couple of days, then I've got to catch up again. Now I'm behind. That's where I get burned out, and I think everybody's different, and you're really just mastering your own energy in order to ultimately be as consistent that allows you to be as healthy, as strong, and ultimately as happy as you can be while chasing your dreams.
Well, you're one of the most positive people I know, and I draw inspiration from your routine and your mindset, especially at a time like this. I guess just to wrap, there are people who are having a tough time with this, and there are entrepreneurs who haven't figured everything out. And I think, again, at the early stage that some of our accelerator startups are at, they're not quite sure what they're supposed to be doing. I'm wondering, given that you've taken this in stride and you're more productive than ever and more positive than ever, where does that come from? Where can someone who doesn't necessarily have quite as much natural drive and positivity, where does it come from for you, and what would be your advice to someone who's looking to channel that even more?
I think there's a couple keys to it, right? I think it starts first with deciding what your ideal life looks like, right? Like, how do you want to feel about yourself? Like, what do you want to be physically? What are you passionate about? What type of finances do you need? What type of relationships do you want in your life? What type of lifestyle do you want to live? Because as long as you're working now towards the ideal life you ultimately want to have, you will have this greater sense of purpose because you'll know where you're headed, right? And then you want to create the milestones that you know are going to create this picture to get you there. And now you have an understanding of how much work you need to do to actually achieve it, which just gives you at least an understanding of where you are headed. And now your energy and time can be put into planning the simplest things to get there, right? But you always have to be looking at yourself, always, because you shouldn't be doing something like, if whatever you're in the middle of, if it's taxing you and stressing you and putting you on the edge because of, like, you're at the very beginning of your journey, you have to be able to understand that it's just a moment in time, and this is all learning, right? And you're actually given a gift to be able to be faced with something so unusual and difficult as sort of a way to understand yourself and take the lessons from that you get to carry forward in case something like this ever happens again. But it is learning to look at life as a whole and understanding what you want out of life, and trying to make sure you're always making progress towards your future self and ultimately the life that you want to live one day.
Love it. Good note to end on. I know it's another busy work day for you and you got to jump, but really, really appreciate your time and your insights. I know the audience does as well. And that's a wrap on our first episode here. I want to thank our guest, Rob Dyrdek. He is the founder and CEO of the Dyrdek Machine. I encourage you to check him out, dyrdekmachine.com, and at Rob Dyrdek on all social. Really good stuff, Rob. I miss you, brother. I look forward to seeing you soon, and hope you and the family stay safe and well.
Thank you, Rod. Great work.
Take care. All right. We hope to join you on future episodes of Accelerate. I'm Rod Kurtz. Stay safe, stay well.
This podcast is produced by the Price Center for Entrepreneurship and Innovation at UCLA Anderson. Learn more about the Venture Accelerator at UCLA Anderson by searching our hashtag UCLA Entrepreneurs or visiting our website anderson.ucla.edu/accelerator.